Joining us now, D.R. Barton, Scott Martin, Susan Lee, and Ashley Webster. I got to start with Google. The parent, of course, is Alphabet. What happened with Google is this. Their advertising revenue is not growing as fast as it was in the past. Advertising revenue is their cash cow. That's why the stock is down $108, 8%. DR, is the run for Google over?
It is not over, Stuart, and here's a couple of things. They went from above 20% revenue growth year over year to 18.6. So they crossed a magical barrier, but they had a lot of currency headwinds. The dollar's been strong, and that's probably going to mitigate into the summer. I'm buying it down here, Stuart. I think this is a good chance to pick this stock up.
What you got, Susan?
So they were $1 billion short of forecasts in revenue. They say it's because of short-term changes in their advertising model. They're trying different things at this point, which is kind of what Facebook did as well. So they're trying to find their footing. But I would say that when you still have 40% of the advertising market in the U.S.
Huge.
and you had to write up the value of your assets around the world, it's not a bad thing.
Yeah.
Funny, the Wall Street Journal describes Google as just an old-fashioned billboard company with some high-tech gloss. And the thing that really bugged analysts on the earnings call was they wouldn't directly answer when they were asked about the decelerating growth. Never answered it, kept deflecting. That really annoyed analysts because they wouldn't answer the question.
One thing I would keep in my back pocket if I was going to invest in Google would be they haven't fully monetized YouTube and they haven't fully monetized Google Maps, if I'm not mistaken.
Content concerns.
Correct.
There you go.
Yeah, that's right. This one's for you, Scott. Just hold on a second. Apple, they report their earnings after the bell today. Now, that stock is up 30% this calendar year. Scott, in your judgment, do they have any more room to run?
I believe they do, Stuart. We've seen some upgrades on Apple recently, so that's obviously been pushing the stock up. You know, it's not so much more about iPads or, say, iPhones anymore. It's about service revenue. Apple Music, as we just saw, just passed Spotify in paid subscribers. That's a big deal. So to me, it's more about the service revenue growth. That's the future of the company, not the hardware.
So I'll be speaking to CFO Luca Maestri later on this afternoon before the earnings. And you can bet that given that they're selling 10 million less iPhones in the quarter, they will be talking about services going forward. And they'll be touting that deal that they made with Qualcomm. So we know that there will be 5G chips in future iPhones, which is kind of a reason for people to upgrade, right? It's a selling point when we have something new technology, something faster for you to use. But also just note that in this April quarter, that's when they tend to talk about capital return to investors. So I'm sure they'll talk about dividend boosts and maybe some buybacks as well.
Yeah, that'll get you going. Yeah. Buyback and a dividend boost. That's good for any stock, right? GE, they are making money. They're shrinking their operations, but they're making some money. The stock's up 4.8%. So finally, DR, I don't know whether it's finally or not, but would you buy it at 10?
Well, I am not a buyer of GE. I think GE has something I never thought I'd see in my lifetime. It's turned from a stock to invest in for the long haul to a stock to trade the ups and downs. I might do that, but the debt load on this stock is still far too great, Stuart, for this to be a long-term investment.
This is their so-called reset year, right? According to Larry Culp, the CEO is trying to turn it around. They burned through $1.2 billion in cash just in the first quarter alone. So that's an issue to DR's point on this debt load that they're trying to get a handle on.
Still up 46 cents at 10.19 as we speak. Check that big board. Very modest gain for the Dow Industrials. 25 points higher, and the Dow's at 26,580. Profit reports came out this morning from 3 Dow components. First of all, McDonald's. Their North American sales up a whopping 4.5%. Nonetheless, the stock is down just a fraction this morning. Merck and Pfizer both reported higher profits. Pfizer is down a fraction. Pfizer is up a fraction. Merck is down a fraction. How about the drug maker, Eli Lilly? Well, they came out with a rather weak forecast. That hurts the stock, down 3.5%. That's Lilly. General Motors, their revenue, the amount of money coming in, fell short of what was hoped for. It's down 2.5%, $39 a share, GM. Higher profit at ConocoPhillips. The stock is up a mere 68 cents. That's 1%. Show me MasterCard. Their profit was up 27%. They're processing a lot more payments. That's up $7. That's 3%. Healthy gain, MasterCard. Another software problem at Boeing. And by the way, their rival, Airbus, will pass the company in jet production. Boeing's at 381. All right, Scott, can Boeing bounce back completely from all of this at some point, or what?
Stuart, if they finally tell the truth, maybe. I mean, my goodness, guys, doesn't this story just continue to take random turns here, kind of like an aircraft in the air here? I mean, I'll tell you what's going on. You know, we saw the shareholder meeting yesterday in Chicago. There were more questions, really, than answers, in my opinion. And it's no surprise, Stuart, the A320 competitor to the MAX that Airbus is producing more of because of the fact that Boeing's having trouble. The thing I'm worried about, especially, though, is what do the airlines do with respect to the relationship with Boeing? Do they sue? Do they come after them for money? Because obviously Boeing has not been truthful through this whole incident.
They got 20-year order book. 20
Backlog.
years of order books. I mean,
the big deal about Airbus passing them is really a small deal. They're passing them, making the Toyota Corolla of airlines. So they're the small car. When you look at the big dual aisle planes, Boeing makes 80% of those worldwide. They still make the high profit margin planes. They're going to continue to dominate that market. They're still a buy here.
so would you buy? You
They
buy
are
at
a
380.
buy here. I think it's going to be a little bit bouncy, but I don't think we're going to get a ton more downside on this news.
Okay, not sure where I stand on this. I like bargains, you know.
Yeah.
Is that a bargain? I don't know.
And making small cars and Corollas is still profitable, by the way.
That's true. Carnival Cruise Lines, on your screen now, their chief says it's getting harder to get people to take a cruise. He said the cruise industry is small compared to the hotel industry.
Let me just tell you how small it is. It says that the total number of cabins on all of the world's cruise ships amounts to less than 2% of the world's hotel rooms.
Yeah. Well,
tiny.
Only 20% of the American population has actually been on a cruise.
Really?
I've covered cruise lines before, but there's a high return rate of 70%. But look, in this world where oil prices are back up and you're paying higher costs, margins are going down, you need more passengers on board, right?
I do not see Stuart Varney taking a cruise.
Oh, don't do that again.
I don't see
too much of a
Have you ever
commitment.
done a cruise? I've never done.
I have done a cruise.
Oh, you have?
One. I did one many years ago when my children were young. Yes, I did. One.
A big
No
margin
comment.
issue. Big margin
You're not
issue.
a return customer
No
then,
comment.
I
No
see.
comment. Hey, Scott, do you want to get me out of this and say something?
Stuart, you're one of the few, though, that, to I think Susan's point, you're not the repeat offender as far as you didn't go back on the cruise, so kudos to you. Cruises just feel like a big commitment, don't they? I mean, you get on the ship, you travel, you stop, you get, I mean, versus the experiences out there with respect to Airbnb, hotels where you can kind of go around, you have a little bit more freedom. It's not as big of a commitment. That's why I think you're seeing that arena shrink so much.
I'm moving on. I'm definitely I'm just getting out of this easily. All right, Burger King's, they call it the Impossible Whopper. It's going to go nationwide. The point here is this thing is meatless. Now, wait a second. DR, you've entertained us in the past because you've tried these things.
I have, and I've tried both the Impossible Burger and the new IPO that's going to become an IPO, the Beyond Burger, Beyond Meats. They'll be IPOing in just a few months. Both of them taste very good. I think the Impossible Burger has a little better flavor, in my opinion. But the big thing, the texture, the eating of the burger, the experience is no different than eating a beef burger,
Wait a second.
Stuart.
Can you order it rare so there's like fake blood coming out of it?
They use Impossible Foods. Impossible Foods uses beef juice.
Thank you.
They use beet juice so that you can get that same experience. Beet, yes, not like that grows in the ground.
Why are you all laughing at me? I mean, it's
a great question because they wanted to reproduce that experience, and you get that.
It's actually quite a clever question.
Thank you.
Yes.
Thank you.
Never even gave that a thought.
And the biochemists tackled it, and they did it.
Beet juice. Yum.
Okay, well, just getting back to the health trends of the U.S. and McDonald's, which is trading close to those record highs. You know, their shares are down because they had to have promotions to drive sales. And even though that's a great same-store sales number of 4% growth, it's actually down from previous years. So maybe it's the Beyond Meats and those vegetarian burgers that are driving people away.
I was taking
from
McDonald's sales of 4.5% in North America as an economic indicator.
Correct.
If you're doing that well in North America, we're doing well.
I love the
hold on a
salty
second.
McDonald's food.
I want to get to you, Scott, on this one, because it seems to me that America is the only game in town. Okay, we've got 3% growth in the first quarter. Europe just came in with 0.4% growth. 20 seconds to you. We're the best game in town.
For sure, Stuart. And don't forget, too, this was predictive economic data that beginning of the year looked like it was maybe 0.5% or so, and a Fed that was tightening, now a Fed that's on the sidelines and, reducing their balance sheet, so that's somewhat tightening. So this is a great economy, and I guess to President Trump's point, imagine if the Fed does get on board with reducing the balance sheet, stopping that at least, and then maybe even cutting rates. My goodness, this economy is going to grow over 5%.
All right, it's that time, everyone. Tuesday morning, 9:40 Eastern Time. Got to say goodbye to DR, Scott Martin, both of you gentlemen. Thank you very much indeed.